What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Last night I was live and Matthew Ramey was on there. I know I have emphasized his name and his works. It was a lot of fun last night with a lot of you guys on there. I think we had it tops 17 people, and it wasn't planned or scheduled. I just said I'm going to get on here, sent Matt text, and I said let's go. And today I'm going to show you 5 cheap and high yield dividend stocks to buy now. This is really interesting. A lot of these stocks I never even heard of. I did a little bit of digging, saw that they're in demand, and I'm going to do a dividend stock analysis. Again, it's time to capitalize on some of these. I mean, you buy the dip. There's a little bit of uncertainty in the market right now, and obviously none of this is financial advice. It's for entertainment purposes, and there's a disclaimer in the description. But these are ones that some of them are very attractive right now as dividend stocks, and they've increased their dividend yield. And I like usually with dividend stocks 3 to 5% range. A lot of websites they consider a high yield 3% or above. So we're going to check these stocks out right now. My first stock is Regions Financial Corp. The symbol is RF. It has a 3.42% dividend yield, a 7.83 PE ratio, volume of 6.99 million. The market cap is $19.12 billion. Its year range 1060. Obviously, you can see when the dip happened. If you got it at 826, kudos to you. I actually bought the dip on Regions and sold it and threw it in some of my REITs or real estate investment trust. And by the way, I apologize. I need the coffee to kick in. And, a lot of this is, with banks and the financial sector, they took a huge blow. And with banks, if you look at their history, obviously when you see the recession happen, they took a huge nosedive. And some of them, it's still taking time to recover. So this one was beating the S&P. In the past 5 years, it pretty much is beating the S&P, even when the pandemic happened. So this is a special dividend stock, and I'm going to show you how it's doing financially in its dividend history, because it's extremely attractive right now. And I'm highly considering buying this stock, just like how I bought Huntington Bank shares. So the thing I like about bank stocks is usually they get bigger and stronger and more effective. And if you look at these trends, this is annual data in millions of US dollars. It's cracked at the 5,000, then it cracked to the 6,000. And if you look at during the pandemic, it still wasn't bad. And it's slowly going up. There's high potential for this stock. It generates a ton of money. And banks, like I said, anytime you swipe your credit card, you take a loan out, housing loans. I mean, these guys are going to generate money. They know what they're doing. Banks in the financial sector, these guys have survived numerous catastrophes, recessions, pandemics, and they still come out strong. They learn their lessons, and they're pretty effective, and they're in demand. People need loans, housing loans, car loans. People like cashback cards. I use a cashback card, a Capital One, and I absolutely love that. That's why I posted a affiliate link if you're interested. It's like 3% cash back at dining. So basically, you can treat yourself and get a 3% cash back on that. And, these guys, it's amazing how fast they've grown as a company and how they have been on the market and how they're such an attractive dividend stock. And I'm going to jump to their dividend history. So I was actually going to show you their stock split history, but it's been like in the 80s and 90s. But just keep an eye on this in the future, because not only is this increasing its price per share, but it's increasing its dividend. And with a 3.1% dividend yield, or 3.11% dividend yield, an annual dividend of 62 cents, and a PE ratio of 7.86, and it's not even $20, this makes it a very attractive dividend stock. And I had this. I'm probably going to buy it eventually. It hasn't even cracked the $20 mark. It's right at $19.88. So this is a very attractive dividend stock to check out and consider buying. So we're going to jump to the next dividend stock. Next one is Arbor Realty Trust. And honestly, I have Arbor Realty Trust in my E-Trade dividend portfolio. And I'm actually considering even throwing it on my M1 Finance dividend portfolio because it's an incredible mortgage-backed rate. And when you look at mortgage-backed rates, they are like slowly tumbling down. AG&C is one that slowly tumbles down. And their dividends really aren't increasing, but these guys have increased their dividend and their revenue is phenomenal. A lot of these mortgage-backed real estate investment trusts also, their revenue really is kind of stagnant or it decreases. Let me show you the revenue of these guys and what makes them an amazing dividend stock, a high yield dividend stock that's less than $20. Now this is annual data in millions of US dollars again. 141, 142, 213, 346, 484, 535, 603, and this is during a pandemic. So I bought the dip on this, and I absolutely love this MREIT, and it is amazing how their business structure is and how they are as a dividend stock. Such a very attractive dividend stock, and I'm going to show you their dividend history. The thing that I absolutely love, and it's incredible how these guys have beaten the S&P in the past 5 years. Their revenue has increased and their dividend has increased. And I'm going to show you that right now. Went to 15 for a second, then 27, 28, 29, 30, 31, 34, 35. 7 days from my birthday, okay, 35 cents. My birthday's on the 20th. I turned 36. Crazy, isn't it? So it's $18.28. It's not even $20 and a 7.41% dividend yield. Now, usually when I look at dividend stocks that are high yields, more than 5%, I'm very careful. I look into a few things. Is it in demand? Is their revenue increasing? How are the fundamentals? And, I try to be really basic when I do stock and dividend stock analysis. But the PE ratio is 7.06, and the dividend, just buying one of them, it's $1.40. The dividend yield is 7.41%. How can you say no to that? That's why I own this one. I'm long in it, and I'm going to continue to buy more and reinvest with Arbor Realty Trust. And it's very interesting that a mortgage-backed real estate investment trust is beating the S&P. I'm going to repeat that again. It's beating the S&P and is increasing its dividend over time. That is extremely rare for a stock like that. So they're doing something right. Let's jump to the next dividend stock. The next stock is First Horizon Corp. So this is a bank stock. This is another one that has taken a little bit of a dip. And during the pandemic, it took a huge nosedive. It's sitting at $15.81. And during the pandemic, really when everybody hit the panic button, it was $8.32, actually $7.72. And the PE ratio is 6.87. The volume is 5.84 million. Market cap is 8.74 billion US dollars, and a dividend yield of 3.79%. This makes it a very attractive stock, but a lot of us don't know where these guys are located. So we really need to understand who these guys are in their locations and why they're a really solid dividend stock to buy that's less than $20. First of all, First Horizon, I'm actually on Wikipedia, and they were founded in 1864. The headquarters were in Memphis, Tennessee. And thing is, they're formerly First Tennessee Bank. It's a financial services company based in Memphis, Tennessee. It's part of the First Horizon National Corporation. It provides financial services for more than 180 locations in and around Tennessee. The company was founded during the Civil War in 1864. Pretty cool. They have a lot of locations. So, another thing when I look into banks is how many locations do they have? But the important thing is how much revenue are they generating, because this is a bank stock. We want to see dividends increase over time. So let's check that out. So good. This is an annual data of millions of US dollars. So basically 1,000, 2,000, and 3,000. So even during the pandemic, it did very well and it was very strong. So an increase of revenue. Again, a bank, they've had to be really stupid to go out of business, or they'll get sucked up by someone. It's either or. And I just see these guys as very strong. And I like their dividend history, which I'm also going to reveal to you. So generating revenue, increase in revenue. So they're in demand. Obviously, people need a bank. Let's check out their dividend history. We got 5 cents, 6 cents, 7 cents, 9 cents. We're at 15 cents, a 3.76% dividend yield, just updated, obviously, 6.89%, 6.89 PE ratio, annual dividend of 60 cents. It's at $15.83, less than $20. So that appears to be a very good buy. So 15, 30, 45, 60, it's going to start increasing. And hopefully, with these trends, it's going to increase its dividend. So I like dividend stocks that, of course, increase their dividends over time. It's like you're getting a raise. You're just sitting on your butt doing nothing. And again, this may not be, same with Regions Financial, this may not be a bad stock to put it in a traditional or Roth IRA and just park it, let the dividends increase. Hopefully the price per share will increase, your net asset value will increase. But the dividend increase is very attractive from this stock. And it's a little bit smaller, so it's not too expensive, and it's less than $20. Let's jump to the next dividend stock. And the next stock will be Star Group, and we're going to discuss this stock real quick, but it's a 5.29% dividend yield, a PE ratio 6.22. Volume is 47.59K. The market cap is 447.42 million US dollars. So the year range, it took a huge nosedive. It's 719. It's slowly trending up and has a pretty attractive dividend yield of 5.29%. But let's figure out who the heck these guys are first. The Star Group is a full-service energy provider specializing in the sale of home heating and air conditioning products and services to residential and commercial customers. The company also services and sells heating and air conditioning equipment and for certain areas provides plumbing services. In addition, Star sells diesel fuel, gasoline, home heating, and oil on a delivery-only basis. Star is the nation's largest retail distributor of home heating oil based upon sales volume, operating throughout the Northeast and Mid-Atlantic. So that's very interesting. Let's look a little bit more into these guys and see what's going on. This is a dividend stock that you need to be very careful with. Study it a little bit more because there's a few things that are attractive and you just got to be a little bit careful with. So let's look at a few things. So it's revenue. Okay, pandemic. You can play the pandemic card. It has been a little wishy-washy. Cost of goods. This is in millions of dollars. Gross profit. Okay. Operating income. Pre-tax income. Income after taxes. Net income. We need to be careful with that. So just keep a close eye on this one. This is one I'm highly considering buying, and I'm going to be careful on in the next few years. I think I'm going to buy this maybe next week. I just like the way it looks and how they are as a company, and how big they are. This is they're somewhat of a very large company. And let's jump to their dividend history. So slowly you're seeing an increase in dividends. Okay, 9 cents, 10 cents, 11 cents, 13, 14, 5.12% dividend yield, a PE ratio 7.32. Now this company, now thinking about it, it's in demand with what I just explained with their what their company is about. So it's very low. It's way less than $20, and it's very attractive to me right now. And I like it's not jumping up too fast, like price per share, and it has a 5.12% dividend yield. That makes this very attractive. It's slowly going up. It's not going to, overnight just blow up to 20 cents, a distribution of 20 cents per share, but it's slowly going up. And, they appear to be pretty strong. They appear to be a stable company, and they have a lot of things in demand. So this is what I like about them. And let's jump to the final dividend stock. I've just been buying these guys recently. Huntington Bank shares incorporated, sitting at $14.58. This is another regional powerhouse bank, and it has a PE ratio of 15.06, 4.12% dividend yield, a volume of 12.28 million. During the pandemic, it was at $8.30. I actually bought it and then sold it when it went up, and it's slowly starting to keep up with the S&P. It was beating the S&P in the past 5 years, and financially they're very strong. I'll show you how they're doing revenue wise. So look at this. I mean, you can play the COVID card right there, or the pandemic card, but this is in millions of US dollars, 2,000, 3,000, 4,000, 5,000. Okay, it's down. I see a strong rebound from revenue. And again, people are taking loans out for houses, car loans. I mean, they're buying used cars that are way past Kelley Blue Book value. It makes no sense to me. But people are getting outbid from that. They're getting outbid by houses by, $50,000, $60,000, $70,000. It's amazing. And if you're a real estate agent, I mean, my gosh, you're going to be flowing in cash flow. So just by selling houses, I mean, my friends out in Northeast Ohio that are real estate agents, they can't, they're like a machine, like selling houses. It's insane right now. So the revenue is very good. Let's check out its dividend history. So 5 cents, 6 cents, 7 cents, 8 cents, 11 cents, 15 cents. Dividend yield of 4.08%, less than $20, PE ratio of 10.27, annual dividend of 60 cents. How do you say no to that? I mean, it is insane how these bank stocks have done so well, and financially, how they're strong, how they rebounded from, a pandemic and a recession. That's awesome that I love about these dividend stocks. So I'm going to jump to a wild card stock. It's a little bit more than $20, but I'm still love this stock. I'm just going to jump to, I'm going to do a quick stock analysis and dividend analysis on it. So that one is B&G Foods. It has a dividend yield of 6.40%, and it's less than $30 at the moment, and a PE ratio of 17.49. These guys they're huge, like in the food business. I mean, Ortega is one of them that they own. That's a big seller, especially on Tuesday, because it's Taco Tuesday day. I always see people at the store buying Ortega shells or Ortega salsa for Taco Tuesday. And the beauty of this stock is the dividends are beautiful. This stock is in demand. People buy stuff from the grocery stores all the time from B&G Foods, and its dividend history is beautiful. Let's check that out. Look at this, 42 cents, 46 cents, 47. PE ratio is 17.51. Dividend yield of 6.53%. Annual dividend of $1.90. This is why I like my monthly dividend stocks, buy my quarterly dividend stocks, and my quarterly dividend stocks, buy my monthly dividend stocks, because this one is insane. I want more shares of this, and I want my monthly dividend stocks to start buying BGS, which makes it awesome and attractive as a dividend stock. So again, if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will post one tomorrow. Thank you again for you guys being live on Monday. Make sure you smash that like button. I plan on posting it, let's see, probably 4 videos a week again. My graduate school will start in about 2 weeks, but I really need to I love doing these videos. It's a very good stress reliever. And, I'm almost at 700 followers. I can be on some Discord chats with you guys, maybe for an hour when I'm taking a break during school. So we can discuss that in the community section. But let me know what you think of these dividend stocks. Have you ever heard of them? Do you think they're very attractive? Just keep me posted. And I'm thinking about picking up from like 3 p.m. to 11 p.m. tonight, so I can put more money in my dividend stocks and so that I can get ready for graduate school. So you guys take care and have a good one.